So let's get right into it. We're going to tackle a huge question in the crypto world today. What would it actually take to use the money in your digital wallet to buy something real, like, say, a cup of coffee? We'll be zeroing in on one company, PintoPay, to see how they're trying to make that happen.
I mean, it's a fair question, right? It gets to the very heart of the whole crypto adoption problem. You might have all these digital assets, but when it comes to spending them on simple, everyday things, it's often confusing, slow, or just not possible. So why is there this massive disconnect between our digital money and the real world?
All right, let's start by digging into the core of the issue. We're going to break down the biggest roadblocks that are stopping crypto from becoming something we use for everyday shopping.
And here are the usual suspects. For a lot of people, crypto feels like this exclusive club that's just too complicated or risky to join, especially when you hear all those stories about scams. And on top of that, even if you do want to use it, the traditional banks can be a real hurdle, often just straight up blocking transactions they don't like. Now, this number, wow, this really puts the potential scale of this whole thing into perspective. This isn't just about making things more convenient for people already in crypto. You got to think, for the 1.7 times billion people around the world who don't even have a bank account, a simple and safe digital payment system could be a total game changer, a necessity, not just a nice to have.
So with all those problems laid out, the company we're looking at makes this very bold claim. They say they've built a bridge, connecting the world of crypto directly to the payment networks we all use every day.
And that brings us right to the main event, PintoPay. So let's pull back the curtain and see what this so-called crypto bridge really is, and how it claims to fix all those issues we just talked about.
Okay, so here's the magic trick. PintoPay is basically an all-in-one app. It gives you a custodial wallet, which just means they hold on to the crypto for you, and combines it with a virtual Visa or a MasterCard that you can use to spend it. That seamless integration, that's the secret sauce to their whole system.
So, what can you actually do with this thing? Well, the goal is to make your crypto work just like regular money. You can tap to pay at a store, you can pull cash out of an ATM, and you can even earn rewards, all of it powered directly by your crypto balance.
Okay, so that's the what. But how does it actually work when you're standing in line, ready to buy that coffee? Let's walk through the exact steps from downloading the app to the moment you make a purchase. They've really tried to make this process ridiculously simple. Step 1, you download the app. Step 2, you fill out a super quick form and bam, you've got a virtual card. And step 3, you just add that card to your phone's mobile wallet. 3 steps, and you are literally ready to start spending.
So the very first thing you do inside the app is get some funds in there. You'd send over a stablecoin, like USDT, to your new PintoPay wallet. That deposit then becomes the spending balance on your card.
And this is where it all comes together. That new virtual card you just created, it links up directly with the payment systems most of us already have on our phones, like Apple Pay or Google Pay.
And voila! This is the payoff. A user taps their phone at the register, the payment zips through, and the cost is taken right out of their crypto balance. You're seeing that abstract idea of spending crypto become a real successful transaction.
And get this, the company claims this entire process, from the moment you click download to having a working card in your Apple Pay, can take as little as 5 minutes. That focus on speed and simplicity is obviously their answer to that crypto is too complex problem we talked about. But wait, there's more. PintoPay isn't just about making it easier to spend your crypto, they've also built in a way for you to earn. So let's check out the financial perks they've baked into their system with this multi-level referral program. Okay, so let's break down what we're looking at here. The whole system is set up to reward you for bringing new people on board. The more friends you invite, the higher you climb through the ranks, from recruit all the way up to partner. And as you level up, you unlock bigger and better commission rates. To make this feel a bit more real, let's look at an example. Say you've reached that top partner level. Your earnings are going to come from 3 main places. First up, you get a direct commission. When someone you referred pays the $35 fee to get their card, you, as a partner, get a 30% cut. That's $10.50 right in your pocket. Second, you get a recurring commission based on how active your friends are. So, if that same person tops up their card with, say, $1,000, you get a 0.3% commission on that. That's another $3. And the third way you earn is through a network share. You also get a 10% slice of the commissions that your own referrals are making. It's a tiered system that's clearly designed to get the word out and grow the network fast. So, what's the big picture plan here? Where is all of this going?
Well, this last part of our explainer looks at the long-term goal for this project. And let me tell you, it's a lot bigger than just a payment card. Just look at their roadmap for 2025. It shows a pretty clear path forward. They're planning to roll out physical cards, add a non-custodial wallet option, which is a big deal because it means you'd hold your own keys, and then they're going to go for a banking license. That's a huge step.
And getting that banking license is the critical move toward their ultimate ambition for 2026, to become what they call a next-generation crypto bank. This would completely change the game, shifting them from just being a cool payment app to a full-blown, regulated financial institution. Which leaves us with this final, massive question to chew on. If a single app can really, truly, and easily bridge that gap between our digital assets and our daily spending, is it just a convenient little tool? Or could it be the first real step toward changing what we even think of as a bank?